Hi guys, it's Sterling Inspector here. Welcome back to the mining show. Today we got 4 articles that we're going over. Well, 3, but we're also going to give a shout out to Ergo. So the first article we have, this is just going to be a quick one for today. Ethereum miners most likely to lose money during the past 2 years. If you didn't sell your currency, you're probably operating at a loss. It's no secret that cryptocurrency prices have plummeted and the potential profits for GPU mining have gone right down along with them. It's been a while since we've updated our best GPUs for mining because it's not advisable to invest in new hardware at this point, nor has it been for many months. But we're curious about the potential profits miners may or may not have realized over the past 2 years. So we decided to do some research based on the price of Ethereum versus the cost of the hardware. In short, if you didn't sell your currency before the crash, you've probably spent more money than you've earned. Below we've selected 10 of the most popular graphics cards for cryptocurrency miners. These also happen to match up nicely with the best graphics cards for gaming. So it just goes over that the numbers we'll present assume 24/7 mining with no pool fees. We've used our own calculations for power draw and hash rates, erring perhaps on the higher end of the profit spectrum. We've also used a price of kilowatt per hour of 10 cents, which may or not be similar to what you paid. Personally, I'm in the UK, so the cents per kilowatt hour is very high at the moment and has been very high for the past probably year and a half. I think it's been at 20 cents. So profitability was down the drain a couple months ago for Ethereum mining. It just goes over this in this chart. It says days mined, the hash rate, power, watts, total Ethereum mined, Ethereum value, power cost, potential earnings, approximate GPU cost, and net profits. So these net profits are all in the minus the ones that have the brackets around them. So right now the only ones that are making profits are the 3090, 3080, 3070, 3060 Ti. So these are all the ones that if you had bought them in the past 2 years, they would have made you profits selling at Ethereum's value of 1,450 or 1,289, as it says here. And then if we look over on the other side of it, we have the RTX 6600, RTX 6700, RTX 6800, the RTX 6800 XT, and the 6900 XT. And then it obviously has the 3060 here. So the 3060 we're in negative $280. 6900 XT is the $342 in the minus. The 6800 XT is $194. The 6800 is in 59, the 6700 XT is in 541, and the 6600 XT is in $504 in the minus. So basically any card under the 30 series would probably be in the minus as well, apart from maybe the 1660 Supers or the 1660 Ti's. Depending on whether you're a miner or someone looking for some, whatever that means, that table ought to make you rethink the value of cryptocurrency mining. The faster mining GPUs on the planet for most of the past 2 years, the RTX 3090, would have netted a sum total of 2.7 Ethereum over the last 2 years. Probably less. 2 months ago, on April 1st, that would have been worth around $7,425. Not a bad haul for a graphics card that might have cost $2,000 to $2,500. Even after paying the nearly $500 in electricity costs for all that mining, you'd still have a nice chunk of profit. But today, if you're still holding, chances are you barely broke even. Unless you got a good deal on the card, we know almost no one was paying MSRP on those GPUs when they launched. And eBay prices were often double or more that of MSRP. Factor in the cost of the rest of the PC and the time to get things up and running, and things look even worse. I won't go on to the full article because it goes over a lot of other things, but basically, in short, if you didn't sell at the, close around to the peak, probably I think the cutoff would have been around 30,000 to sell at. So anything under 30,000, you're probably operating at a loss over the past 2 years. Me personally, I don't really care about the profits right now. I'm just holding until there's the next bull run in, the next couple of years. It is likely to happen that most Ethereum miners have been not profitable. You see these prices on the Ethereum mining Reddit where it's like 15 cents per kilowatt hour or 20 cents per kilowatt hour, and those miners, if they didn't sell off, then they'd be in the negative. Obviously the whole point of Ethereum mining is to make profits, so if you didn't get in on the profits then, then you're probably operating at a loss for over the past 2 years. So next we have the Ergonauts, or Ergo is turning 3 years old on Friday, so basically on Friday they're going to have a birthday marking. I just wanted to give a shout out to Ergo for running for 3 years on their mainnet. They might be doing something for it, I don't really know, but we'll keep an eye out on that and report on it on Friday. Next we have Bitcoin is the only coin that the SEC chair will call a commodity. Monday morning, the chairman of the US Securities and Exchange Commission, or the SEC, Gary Gensler, said on CNBC that the only token that he would lump into with commodities was Bitcoin. Why it matters? Gensler declined to name any cryptocurrency other than the original one, notable because the market has been operating under the assumption there is some sort of wink and nod understanding that either is also not a security. I'm not going to go over the rest of the article, I'm just going to keep it quick because I'm running out of time for stuff to do today. So basically Bitcoin and Ethereum have been these two like commodities that, because they're the biggest cryptocurrencies, but clearly the SEC chairman only realizes that crypto is a commodity. This is good in the fact that crypto is supposed to be used as, well, Bitcoin is supposed to be used as a hedge against inflation, like a commodity like gold or silver or something like that. So the reason that this is good is because the SEC chairman is notifying people that Bitcoin is a hedge against inflation because it's counted as a commodity. So any other coins obviously doesn't recognize them. Ethereum doesn't really have that potential because it has backers, it has people that can control the Ethereum network. This is why Bitcoin is the only cryptocurrency that really is that kind of inflationary hedge, because nobody can control it. The founder is obviously either dead or just not willing to touch the code to realize his dream that Bitcoin will be this kind of digital gold in the next couple of years. Personally, I think this is good for Bitcoin and bad for the other coins, because obviously these other coins need to have use cases for them to be used. Bitcoin doesn't really have a use case apart from the fact that it hedges against inflation. Obviously right now it's not hedging against inflation, so it's not being used in the right term. Gold on the other hand is also plummeting, so it's not really hedging against inflation either, but we see these things through cycles. Obviously in the next 10 years I think Bitcoin will be starting to use as this, but it takes a long time for currencies to be adopted. Even with the US dollar, it's taken 300 to 400 years for this to actually come into effect, and for the US dollar to be the powerhouse of the world. So let's just say in 100 years Bitcoin will probably be that kind of gold inflationary asset. And the last article that we have to go over today is what is cryptocurrency's dirty environmental secret? The phrase cryptocurrency agenda speedy reaction, some people dwell and die on the worth of Bitcoin or Ethereum, whereas some assume crypto miners truly dug into the earth to enter foreign money. As an expert within the local weather sector, I affiliate cryptocurrencies with immense vitality utilization. I'm just going to skip ahead to this can crypto mining impression our grids. Even when the cryptocurrency is operating off renewable vitality, there will be nonetheless the difficulty of vitality prioritization. A inhabitant's heart dependent on vitality, or one supply cannot afford to divert a part of that providing to crypto mining. Basically what they're saying is that Bitcoin or in crypto could be good if they took it from solar or even wind or any renewable, like it could be a water dam or something like that. But it's also taking away power from other things such as housing, important things in the industry, such as, companies, houses, grids, all this stuff. And then it goes on to say, okay, however, what we can do to make cryptocurrency extra environmentally friendly now. I'd advise that it wouldn't be a present solution as to if cryptocurrency is sustainable, and I'm holding quick. There are nonetheless many elements I didn't have the area to handle, such because the steady rise in piles of e-waste and the cradle-to-grave carbon footprint of the laborious drives, the carbon footprint of the cooling in the hardware in the mining facilities, and the impression of the company's investments into particular crypto entities. However, there are potential paths ahead of the corporations and international locations are pursuing to curb crypto's unfavorable impression. Kenya dispatched out a name for miners to reap the benefits of its geothermal vitality, making a much less damaging mining hub in Nairobi. President Joe Biden ordered his administration to provide a report laying out the potential environmental pitfalls and alternatives of cryptocurrency mining, aiming to create a blueprint for the accountable improvement of digital belongings. Within the personal sector, Intel designed a chip particularly to make mining extra efficient, and the Twitter CEO, Jack Dorsey, has already brought the brand new tech. Ethereum's anticipated transition to proof-of-stake system simply grew to become an extra promising actuality after a successful testnet run in June. So it just goes on to say about the sustainable path ahead. Firstly, I think that Bitcoin or any other cryptocurrency mining actually adds to the whole environment and the financial environment of an area. So when you think about it, say if a crypto mining farm wants to start up in a remote place in Africa because they got cheap electricity due to solar. They would come in and they would provide solar panels for these Bitcoin mining farms, but they could also affect the economy because they would have people to build it, people to work there, and they could also give energy, extra energy that they didn't use in the farm, over to people in the actual area. So Bitcoin mining, if you have these facilities, are, building these micro economies in these remote areas that can actually add to this economy and give power to these people that need it. This is one of the main advantages of Bitcoin, is that they're creating mining farms that are renewable, and even if this Bitcoin mining does fail, they'll still have that renewable energy source there for the taking if anything fails, or if they need power for, let's say, a village or a whole town or a whole city. Overall, I think Bitcoin mining is good, but the environmental impacts need to become more centered around building sustainable energy such as solar, wind, or water. So that's it for the video, guys. I know it was a short one today. I've just got stuff to do. If you did like the video, please subscribe and leave a comment below on your thoughts on any of the things I covered. Links for articles in the description below.